also continuing to watch shares of Apple this morning. Those shares were actually higher just before we got to the 10 a.m. hour. Right now, moving on up by about 5% on the day after the tech giant beat earnings expectations for the fourth quarter, but fell short on iPhone sales. Joining us now for a deeper dive into the quarter, JP Morgan head telecom and networking equipment analyst Samik Chatterjee. Samik, great to have you here with us this morning. First, we got to look at the iPhone sales. I mean, this is still 60% of the product revenue, 47% of the overall revenue that they bring in. And we don't get that breakout of the actual kind of generations that are being purchased. But if there's anything that you would point to, what would you say about the consumer with the relation to some of the iPhone sales demand that we've seen thus far?
Yep. No, thanks for having me on the show, and happy Friday, guys. Really solid earnings print, and you saw a solid revenue print from Apple as well. I think relative to the iPhone, to your question specifically, what you can see is Apple's threading the balance between sort of volumes and pricing, or the price increases that they've taken in international markets very well, right? So you can see there's obviously a delicate balance here, given how consumer spending has been tracking, that you need to really be able to drive to deliver resilient results, and Apple has been able to do that. I mean, we've in our data seen some changes here and there, in the sense that there are customers that are moving to the Pro and the Pro Max on the iPhone 14 lineup, so preferring the feature upgrades, and then rather than buying the base model, sometimes preferring to trade down into the iPhone 13. But I think net, what you really want to take away from the iPhone results that you mentioned is, one, Apple remains supply constrained in the ramp quarter, so that's driven some of that miss. But that said, it's still managed to thread that balance between pricing and volume fairly well.
Do you think going forward, we've been talking about potential, if not recessionary signals, certainly slowdown signals from a number of different companies. Is that going to start to affect Apple in the out quarters? I mean, when you get in Amazon, for example, making a holiday forecast that is broadly disappointing, does that have implications that maybe people are going to buy the lower priced iPhone for the holidays, or maybe they're going to get something else entirely?
Yeah, no, great question. I think how we've been looking at this is, as you think about the September quarter that they just reported and the December holiday quarter, you probably will not see as much impact in these two quarters, because there's more of sort of the buying at the high end, people probably using more and more the monthly installment plans and still preferring to go for the higher end products. Typically what happens, you do see a sort of mix down going into the March and the June quarters. And if you do, I mean, we're not really going to bet here that Apple's going to be completely immune from the macro impact, but clearly there's a product cycle in their favor where they've just launched the new phone. So when you think about even the holiday quarter, I think that the momentum there carries through the December quarter. As you get into March and June, we'll sort of have to evaluate where the consumer spending stands. But again, what you'll probably find is it's not going to be a surprise that volumes are going to suffer a bit more as consumer spending pulls back, but also because you've taken the price increases in some of these markets. So again, you're trying to sort of balance it out in terms of where you get to in terms of revenue outcomes. And that's where I think the real sort of upside here is, given how the macro backdrop is. Obviously, not everyone on the street is expecting iPhone revenues to be up next year, but what you're seeing now is a greater likelihood that iPhone revenues could be flat to up next year, even despite the consumer spending pullback, as well as sort of comping very strong growth numbers. So that's where the upside is. That's probably what the shares are showing you, is that people are believing increasingly in the resilience of the portfolio, including iPhone.
Samik, how big of a downside risk is China?
The China market itself obviously has been softer, right? So we're seeing that across the Android OEMs a lot more than we're seeing with Apple. I think two things are in favor of Apple when it comes to market share in that country. Obviously, some of these restrictions that have impacted Huawei are still continuing to sort of play out in terms of benefits for Apple. Not only are you're sort of selling more phones to new sort of upgraders and switchers, but obviously there's a large installed base of Huawei phones that will steadily come through the market and have to purchase new phones. So iPhones have the opportunity to capture that share. And you're also benefiting from the product cycle and consumers increasingly sort of switching into the iOS ecosystem. The benefits of the ecosystem are starting to play out in that country as well. But clearly, it's a market that's a bit more challenged on the consumer spending side. particularly for us, the watch point is some of the events coming up around the e-commerce events coming up in that country, and sort of what promotions are driven around those events. And so we could see a demand uptake around those events, promotional events in the country, but we're closely going to monitor that and see how sort of it trends from here on.
Apple just raised prices for music subscribers. Do you expect within the services realm that they're going to be increasing some of their other prices?
I would say yes. I mean, the expectation would be that you have headwinds both in terms of inflation as well as in terms of sort of currency in the international markets that you need to adjust for, right? And so the combination of that is probably going to be reflected in a pricing sort of across the board, product, services, et cetera. So you're really looking at more broad-based price increases at this point. Not all of it necessarily means that you're offsetting FX on a completely. You're probably still going to have a net sort of modest negative in relation to sort of when you net that out. But I think that's a fair assumption that you have this inflationary backdrop and currency that's going against you in the international markets. So you do need to raise prices. And again, I think what's really the results are showing you is the pricing power that both the products and the services have, which is again getting appreciated by the share price reaction today.
JP Morgan analyst Samik Chatterjee. Samik, really appreciate the time and the context that you've provided around these Apple earnings that we've been chewing on all morning here. Thanks so much.